If you are a senior, an immigrant, a green card holder, or anyone who files taxes in the United States, there is a major IRS rule coming in 2026 that you need to be aware of. This is not a minor adjustment or a routine update. This change has the potential to affect how you file your taxes, how your savings are reported, and in some cases, even your immigration status if it is not handled correctly. Picture this for a moment. You file your taxes the same way you always have, just as you have done for many years. Then one day you receive a letter from the IRS stating that you failed to report information you were required to disclose, even though you were unaware of that requirement. That single mistake could lead to penalties, an audit, or delays in an immigration or citizenship process. This is exactly why this new IRS rule is so important. Beginning in 2026, the IRS will introduce new mandatory reporting requirements that directly affect seniors over the age of 60 and individuals who were not born in the United States. Many people have no idea this change is coming, and that lack of awareness can lead to serious problems. The goal of this video is not to create fear, but to help you prepare. When you understand what is changing and take a few simple steps, you can avoid issues entirely. In this video, I will explain everything in clear and simple terms. You will learn what the new rule is, who it applies to, and what actions you should take now to stay protected. By the end, you will know whether this rule affects you and how to handle it with confidence. My name is Sasha. I focus on helping seniors and immigrants understand complex IRS and immigration updates in a way that is easy to follow and practical. I know how overwhelming tax rules can feel, especially when you are managing retirement, living on a fixed income, or dealing with immigration paperwork at the same time. Most people want to follow the law and live without stress, but when important government rules change, it can feel confusing and even intimidating. That is why I am here. My purpose is to guide you through these changes step by step, without legal jargon and without unnecessary panic. So take a moment to relax and let us walk through exactly what the IRS is changing and why it matters to you. Let us start with the most important question. What is this new IRS rule? Starting with the 2026 tax year, which means the tax returns filed in early 2027, the IRS will expand mandatory reporting requirements on the standard Form 1040. This update is part of a broader effort by the government to increase financial transparency and strengthen compliance with foreign asset reporting laws. In simple terms, the IRS wants more detailed information from certain taxpayers about income, accounts, and assets held outside the United States. Under this new rule, anyone who is 60 years or older and anyone who was not born a U.S. citizen will be required to answer additional questions on their regular tax return. These questions will cover foreign bank accounts, foreign pensions, foreign Social Security type benefits, and international money transfers. Previously, many of these questions appeared only on specialized forms or applied only in limited situations. Beginning in 2026, they will become mandatory for millions of people. Seniors, green card holders, naturalized citizens, and many visa holders will no longer be able to skip these sections or assume they do not apply to them. The IRS is also increasing data sharing between agencies such as USCIS and the Social Security Administration. This means the information you report on your tax return will be compared more closely with immigration and financial records than ever before. According to the IRS, the purpose is to reduce unintentional noncompliance, situations where people make mistakes simply because they did not understand the rules. However, once this system is in place, the responsibility to report correctly will fall entirely on the taxpayer. Even if you have filed taxes the same way for decades, the 2026 return will look different. Ignoring these changes could lead to serious consequences, which is why understanding them early is so important. A major part of this update involves changes to reporting thresholds for foreign financial assets. In the past, many people were not required to file additional forms because the limits were relatively high. Under the old rules, Form 8938 was required only if foreign assets exceeded certain amounts. Starting in 2026, those thresholds will be significantly reduced for seniors and immigrants. If you are over 60 or an immigrant of any age, the reporting threshold will drop to much lower levels. This means many individuals who never had to report foreign assets before will now be required to do so. Foreign assets do not only include large investments. They can include a simple bank account in your home country, an old retirement account, a life insurance policy with cash value, or partial ownership of property overseas. The FBAR requirement itself is not changing. If the combined value of all foreign accounts exceeds $10,000 at any point during the year, an FBAR must still be filed. What is changing is how aggressively the IRS will cross-check this information. Your answers on Form 1040, Form 8938, and FBAR filings will be automatically compared. Any mismatch or missing form could result in automated notices or audits. This leaves much less room for mistakes or misunderstandings. Even people with modest savings outside the United States will need to pay close attention. You may be wondering why seniors and immigrants are the focus of this rule. The IRS has stated that these groups account for a large portion of unintentional reporting errors. Seniors often have long financial histories that include pensions, accounts, or benefits from other countries. Immigrants frequently maintain financial ties to their countries of origin. Many do not realize that U.S. tax law requires worldwide income and asset reporting. From the government's perspective, intent does not change the requirement to comply. By placing these questions directly on the main tax return, the IRS is making it impossible to overlook them. Even a small inactive account could now require disclosure. This rule affects different groups in different ways. Seniors who are U.S. citizens by birth may still be impacted if they have any foreign financial connections. Green card holders face additional sensitivity because tax compliance is reviewed during the citizenship process. Naturalized citizens and visa holders are also included, particularly if they meet U.S. tax residency requirements. So, what should you do now? The smartest approach is preparation. Start by gathering information on any foreign accounts or assets you have. Review your FBAR filing history. Prepare for potential Form 8938 requirements. Ensure that all foreign income is properly reported. Keep organized records, especially if you plan to apply for citizenship in the future. Many problems arise not because people did something wrong, but because they cannot easily prove they did things correctly. Organization is one of the strongest forms of protection. The purpose of this new IRS rule is not to punish honest taxpayers. It is designed to create clarity and consistency. Once you understand what is required, compliance becomes manageable. Knowledge is your best defense. If you prepare now instead of waiting until the last minute, you can avoid nearly all of the issues this rule could create. Stay informed, stay organized, and take action early. Thank you for taking the time to stay informed. This information is provided for general educational purposes only and is not legal or tax advice. Every situation is different and official guidance should always be checked. I am Sasha, and this is Uncut Updates. Stay prepared, and I will see you in the next update.